Our guest today is Dannika Warburton. Dannika is the founder and principal of Investability, a Sydney-based investor relations consultancy that helps growth-focused companies engage with capital markets around the world. With experience across investment banking, hedge funds, and corporate advisory, and a background that began working underground in mining operations, Dannika is an expert in investor relations and capital markets, and she's with us today to talk about investor relations and how companies can connect more effectively with investors. So, Dannika, welcome to the program today. As I mentioned in the intro, your career path is somewhat unusual, from underground mining work to investment banking and now leading a boutique IR firm. How has that blend of experiences shaped your view of how companies should communicate with investors?
Hi, Kevin, and thank you for having me on your show. Yeah, it is a bit of an unusual background, I suppose, but it's probably a little bit overstated as both of my parents, my stepfather and my father, were in the mining industry. And so growing up in Western Australia, where we're surrounded by the mining industry, natural resources, during my university breaks, I would go up to or maybe be sent up to the mines, and I would do little placements there. But I never really officially worked in the mining
I
industry
see.
after I left university. My background's always been in institutional finance, so I started off doing investment banking at Citigroup, and then worked around into different functions on the buy side and the sell side of finance before,
Okay.
landing in investor relations and starting my own firm about 6.5 years ago now.
Well, I want to ask about Investability, your firm. You deliberately limit your client roster rather than focus on volume. So why is that boutique selective model important for you in building your business and your brand and building credibility with investors and
Mm.
boards?
I think that investor relations is a really high trust industry. And so the signals goes both ways, I suppose. With Investability, we work a lot with small cap natural resources companies by virtue of the composition of ASX. And so if we've got a lot of copper clients, for instance, it sort of sends the signal to both the company, the corporate, that we may not be fully aligned, and also to investors. If we're promoting a bunch of different companies in the same sector, it can become confusing. But I also think by virtue of what we do on a daily basis, you've got to be so across the story. And it really lends itself to being very high touch, smaller scale boutique for us anyway. I think there's other investor relations firms that maybe focus on distribution, but I do think that that's different from investor relations.
Now, your early days in capital markets, you operated both, as you mentioned, on the buy side and the sell side. So, what lessons from those perspectives are most valuable to you now when you're advising companies today?
Yeah, I think it's given me a great grounding in what investors want. So from the buy side, it was really how investors, like funds and family offices, filter their investments and what process they go through. It's really interesting to see what's investable to them as opposed to maybe what gets a quick no or what maybe be interesting but not investable. And then on the sell side, working for the broking firms and in corporate finance and ECM, that was interesting from the sense that putting together the deals and being able to sell a story, book the road shows. And it probably gave me a really good foundation in the listing rules as well. So I think the confluence of those two, buy side and sell side experiences was really, really helpful to be able to then start an investor relations firm, which is all about knowing how to communicate with investors. It was a great foundation.
I want to ask about some of those communication skills or some of the things that are critical. I mean, what are some of the biggest mistakes or narrative or communication mistakes that you see management teams make today, and how should we fix those?
I think working, especially with small caps, they tend to over promote or under promote. So, well, probably the most common error to start with is that we see a lot of companies promoting operationally rather than talking about what it means. What's the so what for investors? Like, what is the investment highlight? And so we see too much jargon in ASX announcements, for instance. There will be really heavily operationally focused and miss the investment thesis altogether. Then we see companies either sort of under promote, they'll have inconsistent news flow, be long silences in between news. And so this sort of going dark mode is a terrible signal for investors. They naturally think if you're not communicating, then something must be wrong. And then on the flip side of that, we see the over promote or companies that go out and there's not much to talk about, but everything's really, really hyped. And so I think in that case, there's a real credibility and a regulatory risk. I think the key things to do to fix those are quite easy. You need to just find what is it about your story that is unique? For small caps, for instance, if it's an exploration company, they may not have worked up their projects to a high degree yet. There's still going to be things that are unique about the company. And sometimes this is about the people or the backers behind the company. The other things would be just ensuring a continual cadence of news flow. Investors like to be kept up to date. And even if it's not transformative news, I think it's always good to set a regular cadence around news flow. And it doesn't necessarily need to be material news. For instance, yesterday we hosted a webinar updating shareholders on where the company was and the progress that's happened over the last couple of months. And then I would say in terms of sort of not being too jargon heavy, a lot of company executives naturally are, they might be technically skilled and maybe not great on the marketing side. And that's where sort of an investor relations or media relations firm comes in. When writing announcements or any sort of shareholder communication, it's trying to, really get down to the so what and the key takeaways and leading with those investment theses.
We are here today with Dannika Warburton. Dannika is founder and principal of Investability, and she's an expert in investor relations and capital markets. And she's with us today to talk about how companies can connect more effectively with investors. You can find her and find out more at investability.com.au. Now, Dannika, you were talking about the cadence and the mix of communications, and it's a thoughtful approach that I think could be quickly overlooked. And in fact, it seems to me that many companies could easily underestimate how quickly their investor narratives either can break down or become outdated. What are some of the early warning signs that a company's story is starting to lose credibility in the market?
Sentiment is a leading indicator. So there's a barrage of sources of information where you can go online. In Australia, we've got a stock forum called Hot Copper. It's a predominantly retail focused sort of chat forum. And investors go on there and they discuss their sort of views on a company. We've got Reddit, social media, even just emails that come through either from institutional investors or individual self-directed investors. And so I think when investors are unhappy. Also as well, it'll be reflected in the market valuation, share price, and the volume might start going down, quality of meetings that you're able to get. So these are things that you need to address head on. And so I think that's why it's really important. There's so many tools out there now where you can monitor in real time a lot of the sentiment changes. Yeah, so that would be something that we do on a daily basis. Actually, I can tell you more if you like. But
Well, I'm fascinated by the mix and the strategy behind this sort of connective tissue. And for me, it seems like I'm just thinking ESG and other non-financial disclosures. That's maybe the biggest part of investor relations. And how do you help companies integrate those elements without diluting their core investment narrative?
well, it's interesting actually because you see different themes come in and out of focus and in and out of sort of investor, what's at the front of their mind and what they're caring about. And I would say that recently, probably in the last few years, ESG hasn't been the key focus. I know it's very prominent in Europe this year, especially with just the intense interest in AI and semiconductors and that broader industry, that's filtering down into the Australian market by virtue of critical minerals supply and strategic metals. So as you know, Australia is very rich in natural resources, and Bourse here, ASX, is very much focused on financials and so the big banks and mining companies. And so I think with that in mind, everybody's interested in how do we get security of supply out of non-China sources of critical minerals for the West. I guess ESG comes into play in that role. There's a bit of guidance out at the moment where companies have been greenwashing and maybe fabricating some of their ESG credentials. And so I think we've got to be really careful with only having defensible sort of ESG guidance out there and only saying what we're actually doing rather than sort of like this greenwashing and sort of making things up just to pretty up the deck or, to tick a box.
Investor confidence can ebb and flow based on different conditions and cycles and market sentiment. How has investor behavior shifted recently from your point of view, and what should executives be doing differently as a result?
Well, as I just said, I think we're seeing a lot of interest in the critical mineral space here in Australia, and it does change. I mean, last year we were sort of seeing a lot of interest in gold and silver and precious metals and perhaps a flight to safety. And this year the tide has changed. So as you said, yeah, investor sentiment does ebb and flow. I think some of the things that you've got to be aware of is more of the longer term implications of doing investor relations. And it's not to say that you just sort of like jump on whatever's the new hot thing, but rather it's about building trust and credibility in markets. And that's how you stay for the long game. I think the main thing about investor relations is built upon relationships and building trust and nurturing those relationships. So some of the things that executives could do would be to know that when they're out pitching their company or their investment idea, or, if it's an earlier stage startup, that it takes a long time for investors to be able to have the willingness and readiness to be able to invest. So it's a long process of telling the story, building the trust, and then also staying in touch and nurturing those relationships. And I think that's a key thing that we see in markets all the time, is that a company will only communicate with investors or the investment community when they're about to raise money. And at that stage, it's just far too late. I think you've got to be doing the legwork. So yes, although I do think that themes and investment preferences change, I think some of those key underlying principles remain. So
We have been speaking today with Dannika Warburton from Investability. We've been talking about investor-based relations and corporate investor relations in capital markets. You can find Dannika and find out more at investability.com.au. Now, Dannika, we have reached the action item round of the program. I'm wondering if you could please provide us with 3 quick action items that our listeners can use to take advantage of your ideas and advice.
Sure, Kevin. So I would lead with the investment consequence rather than the operational detail. Less jargon, tell us the so what up front. Secondly, nurture relationships. It's a long courtship. Don't go silent. Always be staying in touch, even if you don't have any transformational news to share. Investors always love to be kept up to date. And number 3, maybe this would be a good exercise to do, and it would be to order your last 4 announcements or your last investor deck and have someone who maybe isn't fully across the space have a look at it. And if they can't understand it, then you've missed the point, I think, and you probably need to go back to the drawing board on the narrative.
Dannika, it has been great speaking with you today. We're just about out of time, but before I let you go, one last question. You've given us some great advice here today, but what was the best piece of advice that you ever received, and how has it shaped who you are?
This is a great question. I would usually say trust your gut instinct, but recently I had an absolutely bizarre thing happen. My house got destroyed by fire. And I think that has taught me, or this piece of advice that I keep coming back to, is that you can't control what happens to you, but you can control how you react. So I think the power lies in your perspective, attitude, and actions, and that's a fabulous, lesson to keep with you in life.
That is Dannika Warburton. Dannika, thank you so much for being our guest today on Everyday MBA.
Thanks so much for having me, Kevin. It was a pleasure chatting with you.